Hi everyone, it's Stuart here, and welcome to Tuesday, the 3rd of March 2026, 3/3/26 in everybody's writing. So, day three of Epic Fury, and the Iranian government are saying 787 deaths inside Iran. The US Embassy in Saudi Arabia has been hit. So, clearly, the tactics of the regime is to sort of broaden the offence in the Gulf, trying to upset as many of their neighbours as possible, push them a bit closer to the United States and the West, and that might, on the assumption that that might dislodge some of the upsets, obviously some of their local supporters and obviously local populations in the Gulf area. It's also destabilizing, hitting places like Abu Dhabi and Dubai and these golden states that have grown very, very quickly from tourism, from obviously businesses and business investment as well, from other events in the world. Lots of obviously Russian money, Russian gold, Chinese money, European money, money from all over the world moving into Dubai in particular. Um, and the wider UAE, Saudi Arabia trying to emulate that, moving away from complete dependence on oil and natural resources, gas, and as far as Qatar's situation is concerned. That safe haven status that these cities have had, these golden states, tax free, easy life, all that sort of stuff. That's obviously bringing that into question. And the longer, obviously, this conflict runs on for, and the longer the Iranian regime have ballistic missiles to get to those areas, the more destabilizing it can be. And then when they're hitting places like, I don't know Cyprus very well. Obviously, I lived there for many years. Islands like Cyprus. Remember, Cyprus is part of the EU. It's the most southeastern tip of the EU. They are the current head of the rotating presidency of the EU, so very significant geographically. Very small island, but significantly geographical location. Always has been. British base is still on the island, much to the annoyance of many on the island, understandably, since independence in 1960. But that was part of the deal. Those runways in the west of the island being used by the British to support, not attack, but support the Allies. And then big fallout yesterday over Sir Keir Starmer not reacting quickly enough, as far as Trump was concerned, to allow access to British bases in both the UK and other parts of the world, notably Cyprus, I would guess, and also in Qatar. Starmer standing up to Trump there, not gone down very well with the right wing press here in the UK. But anyway, obviously the big issue has been the ramp up in oil price, which seemed to have topped out yesterday, but we're having one of those follow through Tuesdays. And I'm just using the gold chart here as a good example of that. So yesterday, everything went as expected from a market's perspective. We had gold rallying, we had the dollar rallying. There were some anomalies which I highlighted yesterday, but like the Aussie yen, the way that moved around yesterday, both positively and negatively. We had Bitcoin rising. You'd have thought Bitcoin would have sold off, but it was rising as the dollar rose. As an alternate asset, gold also rallied yesterday. But today we've had that big turnaround. We still got the dollar rising, but gold has sold off. Stock markets actually closed the day surprisingly positive yesterday. It was completely flat on the S&P yesterday. We finished at 6,881, completely flat. The Dow was down a tad, 0.15 of 1%, and the Nasdaq was actually positive 0.36 of 1%. Today is a completely different story. Oh, I sound really northern then, didn't I? Today. Sorry. I shouldn't make myself laugh, should I, in this kitchen? That's still got this new chart setups confuse me. Anyway, my head's far too big, isn't it? Let's just make that a wee bit smaller. There we are. Obviously, guys, if there's any particular asset, any particular chart, any particular thing you want me to comment on, or have your say as well, stick it here in the chat box on both our YouTube channel. If you direct it here to the restream chat, type it in there. I'll see it, and also on the Twitter feed or X feed. Does anybody still not call it Twitter? Anyway, sorry, this is gold. So gold down quite very well, not quite significantly, very significantly. Did big engulfing candle, obviously. Price is what the price is the price, and the price that's been, if you want to trade, that's the price that's available. So whether it's right or wrong, it doesn't matter what you think. That's the price you trade at, and it's currently at 5,178. So gold down significantly. I was starting with stocks on it. So the S&P yesterday, as I say, closed virtually flat. This is the daily chart. So we were actually, looks a bit strong, but we were flat on the day. Basically, there's the close Friday. There's the there's the close Friday. There's the close on of Monday. Sorry, there's the close on Monday. So you see the very little difference, virtually flat on these derivative candles. The actual cash market, as I say, closed at 6881. Completely flat on the day. Today, very different. You see the futures are tanking here, particularly on Trump's comments about whatever it takes. That comment about whatever it takes to get this done, and it's still not very clear. If you take a step back, what are they trying to do? What are they trying to achieve, the Israelis in the US? Is it regime change? They've mentioned it. They mentioned it on Saturday. It hasn't been mentioned a lot since, and Trump has not used that word regime, or that phrase regime change, since then. Neither is Netanyahu, but they are still talking about getting rid of all the ballistic missiles. And the issue, as I said yesterday, and that's still going to continue, is how big is this arsenal that the Iranians have? Obviously, the intelligence that the US had and the Israelis had to strike at the supreme leader on Saturday morning, knowing he was meeting on a Saturday morning and not Saturday afternoon, which is when it was scheduled for, whether that's inside information like they had an insider teams or cells within the Iranian regime, seems a bit of a stretch. Or is it, this face recognition software that's gone mental via satellites? But who knows? I mean, they obviously had the right information. It was a very strategic site. It's a preemptive strike, as the Israelis called it. And they took out him and many of his other leaders. So that's rattled markets. This continued retaliation by the Iranians into the Gulf states has obviously rattled the oil market in particular. That's gone higher. And I say stocks have finally started to react, as you might have expected, to the downside. But we did have this yesterday as well. If we just go back to the hourly chart from yesterday, we did have this yesterday where we gapped lower, then went lower here into the European Open, and then rallied through the European session, then rallied on cash open yesterday. It's been the exact opposite since then, down in the Asian session, down in the European session. And a little bit of a bounce here in the first few hours of the European session here this morning, and now we're back down again here on this hourly candle. So stocks are back down and moving lower on the uncertainty that's going on. Obviously, the big issue is that again, the other key statement overnight is that Iran have said they have closed the Strait of Hormuz. Not this for them to close, but it's a waterway between Iran and Oman, but they will fire on anything that flies through or sails through the Strait of Hormuz. So as we saw yesterday, we had this spike initially. It's WTI. Actually, let me use Brent, because there's been a bigger move in Brent, the global benchmark, than US WTI. So the difference between, we're looking at, for instance, now we're at 76.50 compared to 84. So it's nearly a $10 difference between the two key oil derivatives in the world. So that's not normally that wide. So it's wide, and the move against the Brent has been more significant, or for Brent has been more significant than the move for WTI, if you try and differentiate between the two markets. But so again, let me just go to the daily time frame. We had a big gap on open yesterday, as we all saw, but we actually closed lower on the end of day yesterday. That's been reversed again, blasting back through $80. We're at $84, and we've been as high as $85. I think this morning, yes, indeed, we are there, $85 on Brent. So oil ratcheting higher on the unknown, basically. How long is this Strait of Hormuz going to be closed for? How long is this conflict going to go on for? Trump is talking about 4 or 5 weeks. It may be, the Iranians haven't got the ballistic missiles the West think they have. They may have more, obviously, and it may be over. Sorry, they have not what the West thinks, and it may be over quickly. However, 750 Iranians plus dead at least. Obviously, we had that friendly fire shooting down 3 F-15 fighter jets yesterday. US fighter jets shot down by friendly fire in Kuwait. It's an awful lot of hardware gone. It's a big expenditure that needs replacing. So again, government expenditure. Obviously, this the ripple on for government expenditure continues. I'll come to that in a minute. But oil continues to rally. Gold is down today. Oil up, stocks down, and yields. Treasury government yields have come back up a bit as well, back over 4% for the 10-year US Treasury. So obviously the economic impact, the longer this goes on, things that were planned, things that are scheduled as far as central banks and interest rate cuts or interest rate hikes, as we're talking about now because of what's happened, is all in flux. And it's the key thing, as I say all the time. Markets hate uncertainty, and the longer uncertainty goes, the more panicky markets get, the more extremely moving markets. But history shows us every single time there's a spike in anything, markets go too far too quickly. So any parabolic moves in this situation can be not necessarily shorted, but just wait, and the correction can come back to quite quickly. So, but at the moment that we're going with expectations of the news flow. So oil higher. I'm showing you the dollar today, but dollar's very much bid still, and it's very much in play. If we look at dollar Aussie, I think is the biggest mover this morning, 70.73. So yeah, there we go. Remember, the Aussie had been one of the best performers, so lots of profit being taken out of this long-term move by the major players from this move up here from 67 here at the beginning of the year. So if you're a major investor, you're a major hedge fund, and you're holding currency flows from month to month, from quarter to quarter, you've had a major move for the first 2 months of 2026, and you may be sort of cutting some of that exposure to the downside. But we still hold the key .70 for the Aussie, but it's the biggest down day for a long time for the Australian dollar. You see there, just in the body of the candle, obviously the day isn't over yet, but we've got no wick to the, key thing at the moment, head of the US Open, we've got no wick to the bottom of that candle. We have got a wick to the top, so we're rejecting higher prices. And the low of the day is where is happening now as I'm speaking. That's what I mean when they say there's no wick. So relatively positive day yesterday, which again was a bit of a surprise. But this is more in tune with what you might expect. So the Aussie dollar weakening, having been the best performer, is actually one of the weaker performers today. Again, exposure, not necessarily directly to the conflict, but obviously the fiscal and monetary fallout that comes because of this. And it's a very interesting day. We've just had this spring statement, which is why I was a wee bit late coming to air, my friends. So apologies for that. But we just had the spring statement from Rachel Reeves, the financial minister, the Chancellor of the Exchequer, she's called here in the UK, but she's basically the finance minister for the UK. And it was a very political statement. It wasn't anything particularly eye-opening or enlightening economically, but there's some updates from the OBR, the Office of Statistics, that the previous Conservative regime set up a few years ago, and growth I noticed downgraded to 1.1%. But she has got a bigger fiscal headroom. But I'll come to the sterling and stock markets in the UK and sterling in a minute. But I'm saying dollar remains bid. And here at the Aussie, it's still holding .70. So this is a key level. We break here. We're likely to hold here. You can see here, so it's a big round number. Obviously, all dependent on what the news flow is, what Trump tweets out today, what he says officially, if he's caught, whatever is. I'm not sure what his schedule is today, but obviously it's round the clock. He has said, I did see one of his Truth Social post this morning saying that they've taken out the head of the Navy, they've taken out the head of the air defense, and they've taken out the head of the Iranian Air Force. Iran regime has held out, so are we ready to talk? Apparently, again, how much of this is true? He said it's too late to talk, says Trump. I've written here, so I think it's his whatever it takes comment yesterday when he was flying back to Washington is one that's rattled markets continually. So dollar bid, none more so again than against the Aussie so far today. So Aussie dollar is well, actually, Aussie Swiss is up 0.68 of 1%. Aussie dollar up 1 or down 1.16%. Aussie CAD 1% down. Aussie yen 1% down. So the Aussie's getting hit quite significantly. Did I miss some Aussie data? Is that why that might have moved as well? Let me just double check. I don't think it was particularly anything overnight. No, UD had a speech earlier, and we had hotter than expected European inflation this morning as well. But I'll come to that in a minute as well. 2.4%, the core. So again, another example of sticky inflation, and the euros come under pressure as well because of that, but obviously because of what's going on in the world as well. So Aussie dollar down. Let's just run through them all. The Swiss franc 78.50. So a good day yesterday for the dollar against the Swiss franc, and again, it had been one of the better performers, as we've been saying for a while. The Swiss franc was the best performer for 2025, and a lot of that is being unwound. So we're back to .79 today. So strong day yesterday. Dollar Swiss was the best performer on the day, and you see that on that massively engulfing candle yesterday, taking out all of this previous action, and we're back to 79, which is these levels we'd been in for the second half of 2025. So key level, can we hold that back there? So big old move there for dollar against the Swiss franc. Dollar yen 157.70 at the moment. So again, up there, not as strong as yesterday, but we are again smacking into the top of this range that we'd had at 157.60, 157.80, and then obviously the 158 level through here. That my big fat pink line on there. And then the key 160 level. Whether we get that high or not, we shall see. There's obviously lots of things the Bank of Japan can do to start to prop up the yen again. But weak yen, the Japanese not necessarily are drawn into this directly, but obviously it affects global markets. It affects the Asian market. Obviously, Chinese response is being measured and watched everywhere. But obviously, the new prime minister in Japan had big spending plans. They may have to be questioned as well. But we shall see again how all of that pans out. Again, this bullishness for Trump to intervene in other countries. It's not the what's the word? Not psychological, but the moral high ground that the West always sort of pulls on Russia and China. Is wearing a bit thin, and that's why the more hawkish in the Chinese regime. I'm sure we'll be bending Xi's ear on that with regard to the upstart that they see as Taiwan, and obviously the risk with Taiwan is TMSC in particular, and all that high value chip manufacturing in that island. So anyway, dollar yen 157.75, 158 is the next stop, and there's a key strong resistance there. So we've retraced back to that level, watching where we go from here. Technically, I say the stochastic is both into its overbought area. So look at the MACD. MACD still got plenty of legs to run. The signal and K line drop here, the 19, then we're still negative here for the signal line here. So big old strong histogram moving strongest. So key resistance area, but still bid to the upside, that one. Dollar CAD, the one back to 137, bit more of a sideways action against the loonie. So that continues to track less of action there. We saw the Aussie, the euro one under 116 now. Remember, 116 was this huge pivot area from last year, and we've given way to the 118 area, which looked like our pivot up until Friday. and we've collapsed very significantly. So a big 200 pip drop in the last 2 days. This has been consistent. Weaker euro. Obviously pressured from both the obviously ongoing situation with regard to energy, because Europe is very dependent on imported energy, particularly the gas out of Qatar. Remember, they switched from the Russian gas, or most of them did, to Qatari gas, and that's been obviously hit as part of the Iranian plan to hit these Gulf infrastructure areas, and obviously the impact on energy costs. Therefore, has a big feed through to inflation costs, and then we've just seen that stronger than expected. Obviously, let me show you what came through this morning on the Euro Energy. Stronger than ahead of this invasion, this attack, but hot, very hot inflation numbers out of the Euro area this one, 2.4% from 2.2%. Again, it doesn't seem like a massive hike, but that's a big old jump technically. Excuse me, my phone's going off. I think it was my father's doctor, so I'll call him back in a minute. The key thing here was the fact it was higher than expected. We've been lower than expected typically, but first time this year we've been higher than expected, 2.4%, and it's still remaining sticky, isn't it? And that's the story we saw last time, the last cycle, and it's always the case. So sorry, I'm just going to switch that off. I'll call you back. Sorry. Excuse me. There we are. Sorry, that's completely blocked my thread. Inflation higher, hence pressure on the euro. So euro down today. Sterling, we look at sterling 133. So it's a bit like the euro. Had a better day yesterday. Massive gap on open, but tanking today on the back of the stronger dollar. So it's not really no different to the euro. So the impact, if you look at the two daily candle there, in line, so they're both weakening. The state, I've gone back to the state we've just seen, but if we look at the, just come back to the hourly move lower. We hit our bottom before she started speaking this morning, so we went to 132.65. And most currencies bounced back a wee bit against the dollar ahead of the US Open here. So dollar's come back. Sterling's come back a bit here. Even the Aussie that's had a slaughtering of a day. Oh no, it had. Well, there we go. It's turned around again. So Aussie's gone the opposite direction. The Euro's bounced a tad as well, but come back again. So perhaps what Miss Reeves has had to say is perhaps lifted sterling a little bit. So no, actually it's come back again in the hour, hasn't it? So so it's moved up and then come back down again. So it's, dollar remains very much on the front foot. So let's just go back to UK and what the Chancellor's had to said. So I say it wasn't a very political statement, nothing to get too excited about. It was growth was downgraded to 1.1%. She was talking about previously saying inflation had come down quicker than expected, but unemployment is expected to actually rise to 5.3%. That's a bit of a, everybody can get a handle on that. Those that don't follow politics on a day-to-day basis or follow the economics or the markets on a day-to-day basis, understanding that unemployment is over 5%, people can feel that and see that. Inflation at 3% for January, it's still, you'd argue that's still 50% above where they want it to be, the 2% target from the Bank of England, and a bit steeper than we've just seen there, that EU area at 2.4%. Interesting. The thing she said right at the beginning, I've written here. I mean, 3 key rooms. There's one big number I'll come back to in a minute, but from the political side, this could have been said by any finance minister in any part of the world. She talked about trying to strengthen global business relationships, building and breaking trade barriers and harnessing the power of AI. I mean, any finance minister, any prime minister, any president in the world would have those as their three of the key pillars of growth. So nothing really new from there. The key thing that may have got her off the hook, and there's this talk we've seen from positive green shoots from the UK economy, which is why the FTSE, one of the reasons the FTSE's been moving higher, as obviously the weakness in sterling's helped over the last week or so, is this fiscal headroom that she's had. It's going to be bigger than she wanted. So it was expected to be around about 21.7 billion. She's talking about it being closer to over 23 billion. So what they do with that and how she keeps that as a sort of safety pot for situations like this. Obviously, those numbers were done before Friday, I would guess, and the impact and the volatility we've seen in the markets, the move in oil in particular, and the continuing weakness of sterling. Obviously, government lending rates is absolutely key, but that's quite a positive for her. I'm saying Rachel Reeves, the Shadow Chancellor. So it's really very much a political statement rather than a real budget. It's a spring statement. Her budget, remember, she's pushed back to the autumn. In fact, it was right at the end of November, wasn't it, this year? So not fantastic, but obviously there's bigger things going on in the world that's impacting the UK as well as the UK economy. The fallout between Starmer and Trump, how long it lasts for, I mean, the world seemed to be getting on quite well, didn't they? But Starmer certainly stood up to him, not just rolled over. His supporters would say. Obviously, his critics would say, we should be hilt to hilt with our closest ally, United States. But anyway, war is not great for anybody, and it continues to move into a fourth day of potentially 4 or 5 weeks, according to the president. So watch, obviously, stuff coming out of Washington. That is what's moving markets. And futures are down significantly still from a relatively okay day yesterday. So where are we all? Well, everything's sort of obviously on not on hold, but in a bit of a flux given this movement. As far as expectations of cuts now, I mean, from what Rachel Reeves has said this morning, that's not really going to impact too much on what the Bank of England are thinking. The expectations in the market here in the UK were the Bank of England, like many central banks, would be cutting rates in March. That is now probably about 50-50, slipped to 50-50. I haven't actually seen any data on that, but I'm just guessing. And like we saw in the minutes last week from the Fed about some talking about rate hikes, that is obviously going to be is on the table anyway with the Bank of England members. So we shall see. So the idea of inflation going away is obviously being knocked on the head. The worry now with with falling stock markets, weaker currencies, and high oil prices and energy costs, particularly for areas like the UK and particularly Europe, is stagflation and lack of growth. And I said there's nothing particularly new in anything that Rachel Reeves said. And in fact, growth, as I said earlier, downgraded here in the UK. So, the trends remain set. Dollar has sort of started to move anyway before the actual Friday move. You see, this trend has been in place here against sterling from the top up here back at the end of January. So it's been down all February. It looked like we were bouncing a wee bit as we got to the end of the month, but that was perhaps just a bit of profit taken on this big down leg we'd had. So we continue to unwind, and 132, as you can see there on the end of day basis, is the next big support area if this conflict continues and people continue to move into dollar as a recovery play. Because remember, the dollar had been particularly weak here, as you can see, as the sterling was all the way down here at 130, but then big strong along with other currencies. A big weakness in the dollar during the start 2020. Six, and then it's all been sold off in February, and now we start March, and big move down as Iran, Israel, and the US go to war. So sterling suffering from a stronger dollar. Interestingly, euro pound yesterday went back to this recent 88 zone high, but then it's a daily. Moved higher initially, but then sold off during the day. But it's still in the upper half of this Bollinger Band. So you see some quite volatile days in this pair, and none more so than yesterday. But we've found a bit of support at .87 so far today. So it's bounced a wee bit today, but a big move down from close to .88 yesterday for euro pound. So both currencies under pressure from the Aussie dollar. The US dollar, but Aussie, one of the weakest ones. Today, we'd looked at gold, didn't we? Yeah, we looked at Forex, we looked at oil, and let's finish with crypto. Bitcoin 6680. So as I said yesterday, certainly was for me, surprisingly, obviously it was traded over the weekend as well. So the major move was here on Friday as we went down under 65. We spiked to 62,800 here on Friday. Not Friday, Saturday. What am I talking about? Yes, Saturday. Sunday we went lower, but still held 65. And then yesterday, Monday, volumes back as gold, dollar, and Bitcoin actually rose. I say that was a surprise to me, but that's what it did. Let's not try and overthink it. But we're now back down again today, and then as we said last week, we have been saying for many weeks that key 70 level remains a big, thick wall top of the Bollinger Band. If we look at the weekly, take it up to the weekly chart. It's been, for the last 4 or 5 weeks, 70 has been a key level. It was a support level there at the beginning of February. We're going crashing into it, and then we've been lower and under it for the last 4 weeks, and closer to 65 now. And the next level down is 60. So there's that zone we talked about from 2024 that we are now well and truly in at the moment. So far, actually up for the week, interestingly, and up today. Up yesterday, but down today for Bitcoin. And so look at the daily action. We did actually spike to 7. Was that yesterday? Yes, afternoon we did get to 70, and then it's just sold off from there. That would have been your entry on this hourly candle. That one there would have been safer. Target 1, target 2. Now we're crossing, and that would have then triggered a long there. So this on the hourly chart is actually playing out quite nice. That hasn't really crossed there. You'd have been here. So Bitcoin would have gone long this morning at 12 o'clock. Stop loss down there. And you're sort of out of the money now, aren't we? Went up, and now we've gone back down. So the trend is down today, but nevertheless, that would have triggered long, and it looks like it may be stalling a bit. But keep your stop loss there, and just be patient. Maybe a start of another little leg up. Target would be around about 60, 68, 800, 67, 800, something like that, as this middle of the Bollinger Band comes down, but they are moving down. I say they've rolled over, pinch there. So that's interesting. So we might see another explosive move. See the pinch there? The tops come down, the bottoms come up literally an hour later. So there may be a more significant move to come. I mean, that on the hourly chart has been caused by this particular candle there at 8 o'clock this morning. But there may be some more to come. So we just watch that one, see how that one goes. So we may see a move higher, or we may quite easily, have an attempt back to 65,000. But the bias really has been to the upside, hasn't it? But this more of a normal move, one would assume, on what's going on. But it's all being driven by the news out of Tehran. Tel Aviv and Washington. So let's have a quick look at the FedWatch tool. Nothing significant. No, I haven't actually looked, actually. Obviously, nothing happening in March. So interest rates are staying the same for March. April meeting, the final one at Jay Powell. Nothing changed there. In fact, that's heightened to 85% now. So only a 15% chance of a rate cut in April. Obviously, in the April minutes, that's very unlikely anything's changing there. June, in the first meeting for Mr. Walsh with his feet under the table as chair of the Fed, that's come down as well. So a 63% chance now. So it's 60, 37, you had that up 37, 63, 37 for no change in June. So that's gone up as well. So obviously the impact of Friday's attack is playing through in the markets as well. And July now is, July is still looking like we may have moved. It's obviously still a long way away, lots of data and lots of potential change to come in the world. So only 50, actually still not much over 50%, is it? It's 50, well, I can't do that math quickly enough. 55% chance of a rate cut by the July meeting at the moment. So that's all changed courtesy of Friday's attack by Israel and the US on Iran. So anyway, guys, if there's no questions, I will leave you in peace. It's now 2:00 here in the UK. So the main news of the day is obviously the unfortunately war related. And I'll leave you with the gold chart, everyone's favorite chart, see where we are at the moment. So the hourly chart is still down. It's looking to try and move up, but we may have found a floor here. We're at 51.56. Let's have a look at the short term. The short term very, very choppy, and I wouldn't have been interested. Let's look at the 15-minute. So what's happened to 15-minute? That was a move down here. That's a buy here. Didn't get to target one. Stop would have been taken. You got in here. Stop loss. You might have been closed flat or in stop lot short because it's not happened. It's crossed to the downside again. So really, go with the trend now. So that you could have entered a short there because your trend is still to the downside. We've crossed lower there in the 15-minute. 5-minute, you'd be all over the place. So just be careful. My friends, in fact, that's very clear. There's quite a nice entry there. Target 1 didn't get to target 2. Big bang. If you'd got your stop loss up here at this point as we'd gone up here, which you would have done, you'd have, the second half of the trade would have made a very small gain, but you'd have been taken out there. Or in fact, you would have gone, that's turned to go short, hasn't it? But we haven't touched the outside, so it's not a valid short position, even though you're with the trend. So it's gone down, then it's crossed up, and there's been a weak entry there, literally in the last 5 minutes. So there's been a week long, but it does follow the rules, that one. We didn't get into overbought on our stochastics, so that's a question. But we have touched the outside of the Bollinger Band. It's on a weak sell move down. See the big long wick, so we've clearly got some buyers there. We haven't gone as low as we'd gone here at 11:30, so it's a sort of valid entry there, but so I say it's a very weak one. So don't be too heavy with your volume size or your risk size on that one, because it's we haven't had a angle movement in the stochastics there. They're still flatlining, so don't get too carried away on that one. Obviously, stock markets open in 30 minutes, but the markets remain dim and down. I'll leave you with the Nasdaq. Again, similar move here on the Nasdaq, trying to move long, but as you can see here, the MACD is short there. So MACD traders have taken it down and they're still short. Nothing's happening there. The stochastic traders trying to catch a long here. So we've touched the outside here. Let's move that one. Looking at this one, but we haven't crossed. So we haven't had a clear cross. I wouldn't be trying to catch the bottom of that, and very much against the trend. That one was okay. That's the first bounce of the day. There's the pre-market. Oh, I've got the wrong. I've got Nasdaq here, not the Dow, but it says pre-market high. It should be pre-market low, I guess. But I did it on the Dow, didn't I? The Dow and the FTSE. So that first bounce has worked into the open, but we are now back into the pre-market window with where are we? 25 minutes to go, and we're above the low of the day, but it was still trending lower. Let me use the DAX as an example because we did go short here on the DAX just before we came on air. Here at 12:30, having got that move up, but the trend was still down. There's the low today, 23,600, and that was short. That was target one. Stop losses would be now sort of here or even below those candles there, and this is just hit target two now, and that's out now because we're flatlined, and we have flatlined for a while. So that's a successful short trade from 12:35 there. On the DAX, the FTSE was very similar. I think we triggered a short. Yeah, the stop loss was up here at the top of those wicks there, the top of the Bollinger Band. It's kept us short. Less of a move. Target one, because it was right on the Bollinger Band there. It's moved, the midline of the Bollinger Band, flat line, not really trending, but it was enough to take enough out, and then that's closed there. It's touched the outside. I wouldn't have taken that long because it's against the trend and it's moving lower. And there's that daily low, 10,443. And it's just been, trending lower all day. There's the open from last night, 10,791. So that was the bounce that we caught. And then we caught with the trend short, basically. So we didn't catch that move up, but we did catch I was out, basically. But we did catch the short to the downside. But let's just move over to the Dow. Similar moves. I thought I'd moved all the lines, but obviously I hadn't. But similar moves here, and even more so. So new. There's I'll actually just move this for now. There we are. There's our pre-market low on the Dow here at 47,893. So there's the bounce in the last hour, and then we've gone short again here quite nicely there from this touch here. So again, that would have been, you could have got in here, but got stopped out, got in there. And then the clear distance as the K and the D line have rolled over, the confirmation is on that one there. So you'd have got in here, stop loss above the turn. Let me just show you that one. So that's your entry, clear move. They're also moving in out of the overbought area into the neutral area from above 80 to under 80. Some people wait till that happens to confirm it. Stop loss will be up there. Down we go, retrace a wee bit, leave the stop loss where it is. Stop loss now on that top of that wick. Target one hit here. Obviously we were quite close, so maybe not taking 50% off on that one at 13.35, but certainly taken some off here as we've touched even here as we've touched the outside of the Bollinger Band. Not close everything out because the stochastics are still moving down, and then close out as we cross there. So didn't get quite the bottom, but completely closed at that point there. So another successful mean reverting strategy down to 5 minutes ahead of the open. On the Dow, we're back on trend, and pre-market low 47,893. I'll be watching that as we come into the open. Will that get tested again, or will we move higher? But as you can see, the pre-market, is that pre-market high? That's from last night, 9:30 last night. We were at 49,000. I was like, just 49,000 supposed to be in as a number. I think that must be 49,000. So I thought I'd done all these, didn't I? So the pre-market high for the Dow today is all the way down here, isn't it? So that's our pre-market high here. You can see just like, so there we go, the crashing of the stock market. So there's the retrace of the day. There's the distance we've moved so far today, pre-market, and we're going back to test it by looks of things. So again, I'm going to do your little fib of the day. Obviously, the leg is all the way down here, but as far as day is concerned, we've moved that far. We retraced to 38, a little bit over 38, couldn't get to 50. And now we're back low under the 23. And, that's looking like we may be going back to test that and establish that. If we went from the high points yesterday to the low point pre-market, we didn't get to the 38 level here. So that might be an upside target if we get back through the 20 period moving average there. See that? So there's your three upside targets: 48, 160, say top of the Bollinger Band, and the 38 from the top, the high to the low so far yesterday, 48, 300. But the extension to the downside is probably more of what we may see. So if we do, let's assume that's the next. Sorry, that's. So if that's our oh God, that's not going to work, is it? I can't draw that. I got the extension there, but the expansion maybe to the downside here from yesterday's. Right, let's do. I'm not the wrong way around, you fool. So there we are. So that pre-market low likely to get tested as our resistance to the upside. But we'll see. Market data might move things. Target came out with some really good, strong earnings. Bit of a surprise for the market earlier today. But really, what's going on in the Middle East is really what's driving market. So take care, my friends. I'll be back tomorrow. It's ADP tomorrow. Private payrolls. Remember, that's all we've been. That's all we've had to go on for a while. So same time tomorrow for private payrolls. Until then, stay safe and be kind. And may the pips be with you.